Rajat Rajgarhia, Managing Director with Motilal Oswal Institutional Equities. Rajat, good morning and thank you for joining us. Rajat, we are off to a slow start for 2014. The euphoria and excitement from 2013 has not rolled over to 2014. Are you confident that excitement and action will pick up as the result season unwinds?
Hi, good morning. Well, I think this December quarter will be almost a mirror image of what the September quarter was, where at the aggregate level, while the earnings growth will be about 12-13%, and after a long time we are seeing that kind of a growth rate. If you just break this entire earnings into the dollar denominated business models, they will be growing at 25-30%, and all the domestic businesses on an aggregate basis will be growing almost flat. So because of which I think the markets are also getting heavily tilted towards the companies which are still beneficiary of the weak rupee, and that is where the divergence is happening. For the slow start of 2014, I guess people are right now just getting realigned to this fact that once the tapering begins now, where January is the first month, how should one position emerging markets versus developed markets? And because of that, if you look at across emerging markets, most of the markets have opened soft for this calendar year.
Rajat, hi, morning. Let's first talk about Coal India, the big star from yesterday. If, what's being talked about is true, 25 rupees per share dividend on Coal India, then clearly this is the stock which is going to be, sort of on a tear up until Jan 14th.
Well, yes, I guess the market last 6 months has been swinging between a dividend and an FPO for Coal India almost every month now. And now it looks like that dividend is going to be the route through which the government will raise money. So whatever be the dividend amount, you would see the stock reacting almost to that similar. But I think more importantly is that if you look at PSUs as a basket, all PSUs across sectors as a basket, the triggers for them would generally come only when you see a period of reforms coming into the space. Otherwise, these are going to be some short-term rallies which will just account for the interim dividends which will come, especially in stocks like Coal India.
Rajat, there are two ways to look at the current market setup. Number one, large cap stocks are doing nothing. Nifty is getting completely jammed, but the polarized nature of the market is changing because there is a lot of price action in mid and small cap stocks. Are you worried about the price action in small and mid cap stocks? Is the tail now wagging the dog, or a strong price action in mid and small cap stock is some kind of an indication that the polarized nature of the market is changing?
Well, not surprised, because I think these are just cycles in a trendless market right now. If you look at the kind of performance that midcaps did for 2013, they basically rallied from their lows in October. But for the year as a whole, almost the mid-cap index was still down by 5-6%, underperforming the large-cap index which went up by 8%. So I guess you are seeing some optimism getting built in. But I would think that this will still essentially remain a large-cap market, especially given the magnitude of events which are lined up from now till May, whether be it US economy, whether be it in domestic monetary policy, and third being the big event of elections. So I guess you will see swings happening between large caps and mid caps needed that realignment with the market. While index was at 6,300, many of the mid caps were at, as of the index was almost half. So I think you have just seen some process of realignment, and those mid caps which are essentially export plays or which have been plays on dollar strength have been the ones which have done very well over the last 2-3 months. I think for the rest of the pack, it's more of a catch-up game that they are doing.
Rajat, there seems to be a big overhang on Axis Bank. It's lost almost 6% in the last couple of trading sessions. What's the big concern with the Suti stake sale? Because the government clearly seems to be on overdrive and, sell whatever they can to match the fiscal deficit target.
Well, I think there are two, three things. First is that, again, this is one stock which has somehow generated one of the highest beta in the private banking pack in 2013. So if you look at the price swings from between rallies, it is one of the highest that you see in Axis. Second, in the report that we have released, we have also articulated which are the stocks which got some of the maximum flows from FIIs during this last 4 years of $110 billion of inflows. And Axis, surprisingly, was the bank amongst all the private banks which got the highest flows. So the allocation that Axis got was also higher than what the likes of HDFC and ICICI got. And I think third, it's very natural that whenever there is, in these kind of a market, wherever there is a supply of paper coming, people typically tend to trade into that name to get it cheaper. That's what we have seen in PSUs, that's what we are seeing in SBI, and Axis is no different.
What about Infosys? Because, the rumor goes that the management is, trying its best now to retain all the top officials that are already there. There are some salary revisions as well, which are being considered. What's the key thing that you're going to watch out for from the management commentary come Friday?
But I think tomorrow is essentially going to be a numbers day, where people will see what they deliver, whether they change their guidance, and what kind of commentary on the business comes. Because as far as this management changes are concerned, they typically hog the limelight throughout the quarter, or they have been hogging the limelight throughout the last 3 to 4 months. But the day of result is when everyone just focuses on the numbers, and I think that is going to be critical, because the commentary that one has been hearing from many global consultants in technology is that 2014 should be little better than 2013 as far as the tech spending is concerned. And for Infosys, it is also a question of gaining some market share that they have lost in the last 2-3 years. This, along with the fact that the currency remains well entrenched at 62, I think people are looking forward to some kind of an upgrade cycle to happen for Infosys, and that is critical for the stock to perform. These management issues, I think there are multiple versions of that. Everyone has their own interpretation, but yes, markets don't like exits of so many top level people in a short period of time. I guess this is where the company will have to do their own bit in trying to provide some confidence or comfort to markets in terms of what is their strategy as far as their top management structure is concerned.
Let's discuss your strategy report. I quite enjoyed reading your strategy report last night, even though it's a long report, a 300-page report. I love the artwork where you've divided India Inc. into 3 parts: emerging drivers, outperformers and cyclicals. But the main theme what you're proposing for 2014 is recovery. Why are you confident that recovery will be the main theme for 2014? Because the economic data is still floundering, retail sales are poor, financial savings are not there, and auto sales, which is the first harbinger of consumer action, is also slightly weak.
Well, I think if you look at the main theme of the report, it basically revolves around the concept of profit pool. So we think that 2013 was the bottom for both economic growth and corporate earnings growth. If you look at our GDP growth, we first bottomed at 4.5. The last print point was 4.8. And I think we will see number tickling little above 5% sometime in 2014 first half. The corporate earnings growth was -4 in June quarter. It rebounded to +7 in September quarter. And we are looking at a number of +12 in December and +15 in March. The moment you exit FY14 with the quarter of +15% growth, the confidence of FY15 remaining at 15% growth is good, and this will be the high growth that we will see after quite some time. Third, we think that today in January, when the debate is whether RBI will do a rate hike or no, sometime in March you will see the debate tilting more in favor of whether RBI will do a rate cut or no, because you will have a supportive inflation data. And fourth, I think the kind of contraction that you have seen on the trade front will allow both RBI and government to withdraw some of the tightness that they have done in few of the sectors, specifically gold. Yesterday evening, the RBI itself came up with some moderated version of gold financing. I guess if you look at the export part on industrial and services and agri part on the rural, both of them will be the leader of this recovery. The other part of the recovery, which is the domestic investment stroke industrial climate, for that we will have to wait for elections, and that is why we are looking at a very moderate recovery. We are not looking at any meaningful recovery. From a 4.6% GDP growth of 2013, I think 2014 should be more closer to 5.5% growth. That is the premise. And secondly, the corporate earnings growth, which earlier was looking at 7-8% in FY14, now looks firm to be delivering 11-12% growth, which is the source of confidence for a 15% growth for FY15.
What's the sense that you're getting now about the mid-cap end of IT? Because while the market still, for now at least, is defensive, we're seeing all and every stock in the IT sector move.
Well, I think the mid-cap IT is just doing again some realignment with the large-cap IT, because we have seen that how between April and October, large-cap IT had a phenomenal performance. TCS itself rallied by almost 40%. HCL Tech Mahindra, all of them almost moved up by 50%. And after that, the mid-cap IT also had to catch up. Many of these mid-cap ITs have actually used this currency depreciation mode well to shore up their margins. And with a positive outlook for 2014 on the IT spending front, I guess some realignment was important. But the discount that you have seen now narrowing between the large cap and the mid cap IT, I think this gap, this discount will remain, because of which it again becomes a scale which tilts more in favor of some of the large cap IT. And maybe, I don't know where one should put Tech Mahindra. While market cap wise it is now a proper large cap at $7 billion, but from an allocation point of view, one still thinks about it as a mid cap. This is one name which is going to keep a lot of excitement in the quarters to come.
Yeah, for sure. What are your top 3 picks then when it comes to the IT basket, Tech Mahindra included?
I think Tech Mahindra is there. Second, I think Infosys, as they ride the curve of market share gains in 2014-15, and given that they have levers to shore up their margins, once their gap starts narrowing versus some of the other two big, especially being TCS and Cognizant on the earnings growth front, I think you will have the valuation also which can narrow down. And thirdly, I think companies like Persistent, which have been doing very well, still have room to do well, provided they are able to keep this growth momentum which they have maintained in 2013.
Rajat, we keep talking about telecom and pharma because that was the pet theme for 2013, but we often ignore telecom, which as a sector has done rather well in last 12 months. The telecom index is up something like 27-28%. Do you think telecom still has the potential to be the dark horse for 2014?
Well, telecom definitely will be one of the top sectors. I don't think that it is dark horse anymore given the big performance that you have seen in stocks like Idea. But yes, I think Bharti has a lot of catch up to do, because investors now want the profit numbers to come in Bharti. While I think last 2 quarters we have seen EBITDA growth becoming reasonably good, that trend should sustain. Once you see this spectrum auction getting over, where people will see whether there is any more aggression left in any of the newer players or any of the weaker players, for them to shell out more, you will see this sector only getting more and more traction. I think the trend is very clear that led by both voice and data, the RPM trend is up. That is going to provide significant operating and financial leverage to companies. And as the balance sheet gets healthier for the entire sector, there's a lot of money to be made. Idea, which delivered very well in 2013, will be another top stock for 2014. But I think this will be a year when Bharti will have to do a catch-up because of the lag in performance that it did in 2013 vis-a-vis the sector.
Rajat, the odd one out from in your model portfolio is cement, ACC and Shree Cement. Now, cement stocks are not very cheap. At a time when markets are genuinely hunting for recovery stroke value story, what makes you bullish on ACC?
Well, I think ACC fits into both the concept of recovery and value story, because if you look at ACC today, it trades at closer to $80 per ton. The top three cement companies, look, this year the utilization level in cement at 70% is the lowest in the last 2 decades. And we have still seen the large cap companies making double-digit ROEs. I would think that cement is an early cycle recovery rather than a late cycle recovery sector. Because as soon as you start seeing things getting little better, you will start seeing some demand pickup. Almost every company in the sector has right now done away with their new capacity expansions. So companies are right now just going to focus on ramping up their existing utilization levels. The balance sheet is very good. Dividend yield will be closer to 3% for ACC. And then you have technical factors where Holcim will likely consider raising their stake. They have their cost synergy advantages which they are planning to roll out. And I think $80 in a period when the new capacity doesn't come below 120, 125, it is definitely a value today. But yes, the more important is that cement will be an early cycle recovery rather than a late cycle recovery. Shree Cement is almost fits into that same theme, but I think Shree Cement has gained even more credibility given their execution that they have delivered over the last 4-5 years. That also trades as attractive as ACC.
Rajat, what's your view now on Maruti? We've seen the stock outperforming of late, but now it seems some of the media reports indicating that Suzuki officials have been meeting LIC regarding an open offer. LIC holding almost about 8.2% stake in Maruti.
Well, there are three things to look at Maruti. First is the volume growth, second is currency, and third is this whole euphoria around parents making open offers. I think the second part has what has driven the currency part has what has driven the stock significantly. In the last 5 years, Maruti's margins coming down from 15% to 7% was a function of yen appreciating from 120 to 80. Now we have already seen half of those gains being reversed, and so the margins have also reverted from 7% to more closer to 11%. I think the next part is this technical factor which has been driving all these MNC names, and Maruti being no different. At some point of time, you may see some price action. But I think the key is the underlying volume recovery whenever it happens. Their volumes have stabilized now in a band of about 90,000 units to 1 lakh unit now for almost last 3-4 years. And at least investors hope that at some point of time in the second half of 2014 calendar, you should see these volumes perking up. That is still right now a hope, but I guess the margin lever on account of the currency is very significant for them to drive their earnings this year.
Rajat, final question. I won't talk about the obvious names which you like. Let's talk about the odd one out, and the odd one out happens to be Hindalco. What's the thinking here? Are you bullish on global growth and you expect Novelis to do better, and if Novelis will do better, Hindalco will benefit? Is that the thesis?
Well, I think the first assumption is that the aluminium prices in the rupee terms have definitely bottomed out sometime last year. So that in itself is keeping the realizations quite stable. Second, the maximum of the capital expenditure that Hindalco had to do has been done, and now you are seeing the capacity commissionings beginning to happen in 2014 for them, which should drive their cash flows. And Novelis, I think, continues to do well and should see some ramp up going by the production growth that they themselves are outlining. This is one of the few companies which has maintained reasonable ratios even in the worst period of commodity downturn. So I guess trading at so attractive valuations, this is one stock which can surely deliver good return in 2014.
Rajat, it's really good chatting with you and appreciate you taking the time out and speaking with us.